Well, greeting everybody. Bill Moore here. We are on our continuing quest to find low-risk trades in the components of these sector ETFs. We have 11 baskets that we've created. I've already loaded them and run the analysis. By the way, that analysis takes about an hour and a half or so to do all that stuff, at least on my computer. So in any case, all that is done, and now we're just going to go take a look and see what we have. I did that, and then after I ran the full analysis using a correlation of 0.8, an RW coefficient of 0.8, and then afterwards I went ahead and added that the standard deviation should be at least at 1.25, that it should be well behaved, as I call it, by having winners in the past. I set a minimum of 3, and that the expectation value in 30 days will be 5% of whatever it is we're betting, whether it's up or down. So with that in mind, I want to go straight. If you've been following these videos, you're going to see several of the same ones popping up. We've already made a couple of recommendations on 2 of these, actually, from the past couple of days. But today we're going to go take a look here. Okay, this is in the medical field. It's not a sector we have looked at so far. But this particular pair, this is Thermo Fisher Laboratories and Abbott Laboratories, I believe. 2 medical laboratories. That's why the tool hooked them up. The RW coefficient is going to be very tight for these guys, so that's good. And you can see it here. You can see this is a very nice picture. It's got a slight downward drift, okay, just slight. But overall, this is a nice looking picture, and we can see from the quick and dirty back test here that it's been outside of the second standard deviation 6 times and returned to the mean profitably every time. And that, from this picture, I think you can kind of pick up on that. It is right now getting down next to the second standard deviation down here. It hasn't crossed over just yet, but let's take a closer look at that. So the whole point of doing these things is to create a synthetic symbol that is strongly mean reverting, which I believe we see, and that also has a much lower risk profile than any individual product. So what's the on this one? Where are we at with this? This all looks very good. The only thing that's not quite right yet is that it's still moving down. So I am going to make this the recommendation for today because this is such a strong pair, but I am going to take a look at it, and I am not going to put it on unless it begins to turn around and go the other way. So we can see that it's already gone through, the lows of the past, but I think that's indicative of the slight negative slope we have here. It hasn't tested the lows that it had at the beginning of the year. So we're a couple months into this, and it's testing new lows. It would have been great to pick it up here. You would have gotten back out of it at this spot, and you'd be getting ready to get back in. Let's go ahead and take a look at the hitting probabilities. So we've got it here. Okay, so this is not as strongly mean reverting. It looks like it's very steady, though. Look how tight these numbers are. It's a very, very steady mean reversion. Okay, it's got the slope in the right direction, but it's not like crazy like some of the ones we've seen before. Let's run the simulation. Well, that steadiness is reflected over here. The Monte Carlo simulation is saying that we will be above minus 19.79, which is the current price that we're at right now, 97% of the time in 30 days. That's pretty good. And in fact, we're going to hit our target price of minus 5.93 in 3 weeks, 3.5 weeks. So those are pretty darn good numbers, right? That's really good. I am going to make this something, I've already added it to my list. I am not going to put the trade on until I see some sign of that reversal of this piece here, until it starts to look like it's turning around, and it might turn around intraday tomorrow. I don't watch it. I don't watch the stocks every minute of the day. So as a matter of fact, tomorrow I have a number of appointments. So I usually do all this work in the evenings and early morning. But as soon as I see some sign of this reversing, then I'm going to put this on. So let's make this the recommendation. TMO minus 3.49, let's say, of Abbott. It's a long. So for every share of TMO you buy, you're going to sell 3.49 shares of Abbott. Good luck with your trading.